Good morning, everybody, and this is your S&P 500 day trade setups for today. So we did pull back off this previous high from the previous week, and that is right here at 38.89, and we are now waiting for the Fed. So Feds will come out later today, well tonight for us that are in the European time zones, and we need to wait for that before anything happens. We are still in this channel. We're on the downside at the bottom end of this channel. We do have a decent crossover. The moving averages still not crossed over of the 155. One thing that concerns me is that the oscillators have crossed over and are pointing down. So there's a bearish view here. There's a bullish view there. So pretty much typical for when the market is tethered on what the Feds are going to say, or when they're waiting for news. So for me at the moment, this is still very much a sit on hands. If you look at the 3 hour, you can see we've dropped off on the oscillators and we've separated, and we are looking like we're going to cross over. So there's another bullish signal. Bottom of the trend line, well, not quite bottom of the trend line, but close to the bottom of the trend line. And now we're just hovering here with inside bars forming as well. I'm not convinced at the moment. We do have a little bit of diversions here, which would be continuation diversions. But again, as I say, I'm not convinced either way. I think everything hinges on what the Feds are going to say. If we look at the hour, we might as well just pull this level in. You can see this was previous resistance, previous support, and now looking like resistance, and now we're just hovering on it. We do have a grouping to the downside and looking like a move back to the upside, but I suspect we are just going to hover sideways along this level, and it's going to be our pivot line. So basically, interest rates are what the market are expecting, with a better than, how do I put this, with a decent outlook for the next couple of months. Then you should expect a rally. If interest rates are kind of as expected, but still with a very hawkish outlook, in other words, they're still looking to increase a number of months into the future, then expect a fall. If the interest rate hike is worse than expected and a lot more hawkish, expect a massive fall. You've got gaps here. We spoke about this gap yesterday. That gap is still in play, and then you've got all this chaos in between here. So I'm sit on hands. I'm really not interested in this, and you might as well just put a zone in here, because that's kind of what it is. So this is where you need to pay attention to: 38.66 and 38.46. Start dropping below this, come back and test this. I would suspect that that is a break of the channel, and I would expect a bigger move down. Find support here, possibly for a bigger move to the upside. So anyway, that is sit on hands for me. Not really interested in anything else on this, and hope it helps, and we'll catch you tomorrow morning. Cheers for now.